has to the equity markets. So just give me one moment here, and I'm going to pull this up so everybody can see this. We're going to use the S&P 500 E-mini contracts, which is essentially the same as the E-mini, so that's fine. Now, looking at equities, again, we're going to go into the short-term crossover. We can see that this has crossed over to the upside, actually towards about the beginning of February. However, it hasn't been able to make a very big move. Now, looking at the medium-term crossover on the equities, we also have a very strong crossover to the upside. Looking at the long-term, we also have that. That's a confirming indicator also. Now, again, we want to apply the RSI. We're going to apply, for this presentation, the RSI and the TSI. See here that we've hit the overbought level and we're actually coming down, so it has room to extend. Predicted TSI, again, crossing over in heavily oversold territory, again, supporting that equities do have room to move higher here. So the correlation to the equities, what we're going to do, I'm just going to take this off here for a minute so everybody can see this. I'm going to hit apply to all. Then what we're going to do is we're going to use the S&P 500 as a comparison to some of the other currency pairs. Now, we can see that we don't have this crossover yet. Now, the US Swiss franc, obviously there's very little correlation, not a high correlation there. But let's have a look at the correlation in the equities to the light crude contracts. Again, almost identical. Crude making a little bit more of an aggressive move, but they're also very close. Now, the key thing we want to look at here is for the last 2 years, we've had a correlation from the equity markets to the equity markets to the commodity markets to the US dollar. There's been a high correlation there. So again, we want to see what's happening in this particular case. Now, looking at the S&P 500 contracts, E-mini contracts on the futures side, the crossover to the downside has taken place at almost exactly the same time the crossover took place to the upside on the US dollar index. So this suggests that there is still a correlation here. So if the equity markets can break higher and break some of these key levels, this suggests that the US dollar might be getting a little bit toppy here. Excuse me. So what we'll have to do is continue to monitor this, but for now, this looks to me like the US dollar is going to continue to move higher and equities are going to be somewhat limited in their move higher, but this will have to be left to be seen. So again, we're going to pull this back up here. Now, again, we're going to go back in. We're going to look at certain currencies during this presentation because this is a pre-market setup. Now, bear in mind, Forex is a 24-hour market. That being said, a 24-hour market, this thing has been trading pretty heavily throughout the night. But let's have a quick look here at Euro-US because I know that this one is a very popular one. Let's look at the predicted highs and the predicted lows and what we can expect today from the Euro-US currency pair. So we have 136.96 as the high, 135.57 is the low with the neural index pointing down. Now we're going to switch this over and actually have a look and see what Euro-US did. 135.38 was the low. We're now sitting at 136.16. The high so far, 136.19. So the predicted low from Vantage Point and the actual market level is extremely close. And you know, there's two ways that this can be played. Buying off the bottom or selling into strength. Now, it's very important to understand that buying the bottom and selling the top is not always the best strategy to go with here because really we're in a very powerful downtrend, so we prefer to trade this in one direction. Now, again, looking at the Vantage Point software, looking at the triple EMA crossover, we can identify 138.24, 136.98, and 136.58 as key levels. So as resistance, not as support or anything else. So these predicted 3-day, 8-day, and 18-day predicted exponential moving averages from Vantage Point in most particular cases are used as pivot points. So for today, we're going to be watching 136.56 very closely as a potential entry point. 136.98 would then become another potential entry point. And our stops, in reality, should be above the 138.24. There's a bit of a wide price gap there, but we don't want to get caught up in this intraday trading. The reality is the US dollar index is moving higher. Commodities, however, are also moving higher. So that may limit the amount that the US dollar will be able to actually move forward. But that's again left to be seen. Right now, looking at what's happening in the market, gold again 1117, a very strong move off that. Equities, however, again holding at this 1099 level. This was an area we were looking to sell at. Yet we did sell at yesterday at exactly this 1099 level, and it's having trouble getting through this area. So with Euro US for today, we're looking at an area we need to identify key areas. We have the Vantage Point predicted high of the day, which of course we want to take into consideration, but we further want to look at potential early entry points. That's where the 3, the 8, and the 18-day predicted exponential moving average from Vantage Point come into play. Now that's one look at that. We're going to look at that now. Because we have limited time today, we're basically going through what we're looking at, what to watch for, and directional changes. Now, another pair that comes into play here is the US-Canadian pair. Now, looking at the Vantage Point software, we're going to run through the same thing using the 3, the 8, and the 18-day exponential moving average. 105.44 is a major resistance level, 105.19 second level, and the first level 104.70. So these are 3 pivot point areas. So now let's go in and have a look and see what the US-Canadian pair is actually doing. I'm going to pull this up front and center so everybody can see it. So we've hit the 105 level today. We're now sitting at 104.23. This is directly linked to this gold contract beside it. So because we can see that gold's moving up and US Canada is moving down, this absolutely warrants that we should have a look at this. So now let's do this. Let's apply this as our base. We're going to call this our base here, and then what we're going to do is we're going to put the gold contracts up against the Canadian dollar and see if we can actually see a correlation of what's happening. So we haven't got a complete crossover from gold. We've already been through that, but we can see with the US-Canadian pair, we do have a fresh crossover. This is definitely a point of interest. Gold is actually could be considered to be lagging behind the US-Canadian pair somewhat. So this suggests that gold is going to move higher, and the US-Canadian pair is going to move lower. So again, looking at these 3 pivot areas, 104.70, 105.19, the first smaller position, if you're trading multiple positions, can be entered in the 104.70 area. Stops are in very reasonable territory here. We can see that there's a very narrow price gap between 104.70 and 105.44. So the short entry point is actually very good. So what we're going to do here, we're going to actually have a look again at looking at the US-Canadian pair. We're also going to add another recommended trade today, which is the RBOB gasoline contracts. I believe we have a fresh crossover taking place on this and a somewhat of a trend reversal, and that I hate to tell everybody, but the gas prices are probably heading higher. So this